Hey everybody, this is Jim at SP500chart.com. It's 4:20 on July 9th, 2014. Let me read this to you, then we'll get right into it. The website and this video are for educational purposes only, and nothing stated at the side or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. So let's see how things worked out with the chart today. Starting out here on a 30-minute chart, you can see that so far it looks like we are bouncing on this orange trend line. And if you look at the last two bounces here, if you look at the pitch, tell you what, we'll just make a parallel line. See that, and that. So far it looks like this is very much like the last two times we found support on that line. But I think it's smart to realize things do not always work exactly the same each and every time you tag a line. As a matter of fact, every rising support line, I think probably in the history of man, that has been worth following has eventually broken. And every descending resistance line, they eventually break. Now, obviously a stock that goes bankrupt, no. But we're talking about things that have more stability than just an individual company. If we ever get to the point to where a descending resistance line never breaks, then we're probably looking at the end of Western culture. So let's hope we don't get there. That said, the main gist of why I said that is there is no guarantee that we stay above this line. But so far it looks pretty good that we want to bounce here. And keep in mind that sometimes after a fairly swift move, and even though this was a small move, sometimes you get the formation of a bearish pattern that we've talked about many times before, called a bear flag. And I think we need to keep our eye on this on the outside chance that this could be one. Where it's situated in relation to the support line, you kind of wouldn't think so. But if you look at the chart and you divorce yourself from both this line and this line, then you could say maybe we're setting up something like what we saw back here, where we came down, broke a line, gained a little bit of strength, albeit in a little bit more of a wedge shape. Then we had another day where we got knocked down. So far we've gotten knocked down one day, and then for the most part, after that initial move down, we've spent the last one and 2/3 days rallying. So I think we can keep an eye on this lower line right here, just in case this ends up being a bear flag. If it is, then we would at the very least come down and retest support. And if this breaks here, then I think we likely are looking for a move back down to into the 1940s. So far, however, it's looking like the same kind of bounce that we got the last two times. Additionally, if we look at some short-term resistance here, looking at a 5-minute chart, and for what it's worth, we're over this little line, and I don't even like to really look at things like this because that is such a short-term thing. We could go here and say, well, we had 1, 2, 3, a big dip, relatively, not really a big dip, but relatively. Then we're over that line. Maybe that's worth considering, but frankly, probably not. In other words, I wouldn't take that as some big sign of a huge turnaround in the making. Instead, I would just look at this and say, if we stay over this orange line and if we continue upwards just a little bit, then it looks like we may be in the process now of coming up for a move on 1990. Even if we stay inside this wedge, and this ends up being a more strongly confirmed wedge pattern, we got room to get to 1990. So guys, I think that's going to be all I really need to add to what you already know from having watched other videos. Clearly, since this line broke right here, this now should be resistance. Thankfully, it's moving up at an angle that would allow for the market, for the S&P, to appreciate and reach 1990, and could actually do it by the end of the day tomorrow, and not even have to get over this broken support line. So this line can act as resistance from now on to eternity, and the S&P is still free to make nice gains, because this line is moving up at about 5 points per day. Here we are down at 1972. It would be very easy to make that 1990 target without anything in this chart having to misbehave. Let's put it that way. So guys, there's your video for a trading session ending July 7th, 2014. I think I just said July 7th. I meant July 9th, 2014. Appreciate you taking time into your day to watch this, and take care.